Welcome back. Up now, we have Forum Daily's weekly market update with Catherine Murray, host of The Buck Stops Here. All yours, Catherine.
Thanks, Nima. Hello, everyone, and welcome to your weekly market recap. I'm Catherine Murray. Well, we are seeing North American equity markets mixed today. It's a bit of an interesting picture. The Dow's up by over 300 points. The TSX up by about 0.6%. But you are seeing a little bit of pressure on the S&P 500 and also quite significant pressure in the tech-heavy NASDAQ. We'll get to that in just a second. Of course, the big news here in Canada this week has been the Bank of Canada raising rates by 50 basis points to 3.75%. It's the sixth time in a row that they've been raising rates. It was, however, a little bit less than the economists were expecting, which was 75 basis points. This has actually been supportive for risk on assets, the equity markets here in Canada, because it's a little bit less than expected. In other words, the BOC is turning a little bit more dovish, indicating that the tightening cycle might actually be closer to the end. Right now, they're saying that the terminal rate is probably going to be around 4 to 4.25%. Now, of course, immediately following this, we did have the big banks raise their rate to the consumer to 5.95%, just so you know where you're at in terms of your mortgage, credit cards, and any type of loans that you're looking at. 5.95% is where the banks currently stand. The BOC also did downgrade their growth outlook for this year to 3.25%. They took down next year to 0.9%. So again, slower growth going forward, and down to 2% in 2024. They also, of course, lowered their global growth outlook as well. Now, away from that, as we look at the TSX, as I mentioned, it is higher today. Most sectors are higher. Tech is leading the way, with Shopify leading those gains, following better than expected earnings results, specifically on the revenue front. And the company management also reiterated their guidance for the fiscal year. We're also keeping our eyes, of course, on the price of WTI. It's up by 1.5% today. So a nice bounce back in the price of crude, really following a stronger U.S. GDP print than expected. Why would that factor into WTI? Because we've seen the price of oil decline out of concern that we are seeing demand destruction because of concerns surrounding a recession or slower economy. That GDP print gave life to the price of WTI. People are still out there using their cars and flying places and spending. So we are seeing WTI help the energy sector here in Canada. Away from that, we're also seeing the Canadian dollar slightly higher versus the U.S. dollar. And the U.S. dollar actually, interestingly, did hit a one-month low yesterday. In terms of corporate earnings here in Canada, we're taking a look at tech. They did come in with better than expected results. They are selling their energy business in Fort Hill to Suncor for $1 billion. That stock's trading lower. CP, the railway company, of course, had an inline quarter. Revenue was better than expected at $2.3 billion for 3 months. And they also indicated that they are seeing strong demand and that they've got the capacity to fill that demand. We're also seeing West Fraser Timber higher on the day to the tune of about 1.2, 1.3%, following a big earnings beat. And Shaw stock has also been moving higher following comments yesterday from the minister with optimism surrounding the Shaw-Rogers deal going through. Competition Bureau, of course, says they're going to continue to take a serious look at this, but nonetheless, stock moving higher. Cameco also had better than expected results. Shifting our focus now to the United States and what we're seeing there, again, a little bit of a mixed picture. The Dow up over 300 points, but the Nasdaq under pressure. The big story in the United States right now are the very disappointing results out of Facebook, or Meta as it is known, specifically on the expense side, the operating expense ratio. Very much disappointed investors. And investors are very concerned that they are just spending too much money. Their core business seems to be strong, but a lot of money is being spent on Meta, the universe, and AI. Away from that, of course, we are seeing the value stocks and the reopening trades doing very well in the United States. So think machinery, energy, airlines, rails, and restaurants, all performing quite well. And in fact, the leading stocks within the United States, and this is why the Dow is stronger versus the S&P, because these are Dow heavyweight components: Caterpillar, Honeywell, Comcast, CMSCA, all performing very well on the day. Now, of course, what we're going to be focused on next will be what we do hear from the U.S. Federal Reserve. There are indications from various Federal Reserve presidents that perhaps the U.S. Federal Reserve is tightening too aggressively. We actually have heard of those comments this week. And I had a guest on today for my program on Sunday. I encourage you to watch it. He goes through the specific comments from the various Fed presidents. And this is really important because it is supportive for equities in your portfolio if they slow down the tightening. I'll leave it there, Nima. Back to you.
Thanks for that, Catherine. Again, that was Catherine Murray, host of the Buck Stops Here, which airs on Sunday mornings at 9 a.m. Eastern.